In terms of financing and how we've managed to finance the business, to purchase our first satellites and launch those satellites and get us to revenue, we chose a fairly unique approach in the sense that we IPO'd the company. We decided to do that initial public offering on the Australian Stock Exchange. There's lots of benefits to working with the Australian Stock Exchange. It's a very liquid market with access to capital, which has been very, very useful for us as we continue to grow as a business especially. And the Australian shareholder base has been very welcoming to us. They understand the problem space and the market that we're working in, which is specifically, in this case, the maritime security domain. And it's something that the Australians understand and get. So we've had a really good response there. Longer term, what we wanted to do was also engage the European shareholder base, and as we continue to grow, we want Europeans to engage in that as well. We're a European-based company at the end of the day, so we dual listed on Frankfurt, which is very easy to process because it's a like market with ASX. It's a very simple process to do. We're going through a process now, starting to engage the European market and get those shareholders on board as well, and give people the opportunity here in Europe to participate in the shares and get benefit out of that as well. Why Kleos is a good investment for shareholders or for investors is that we're very focused on commercial outcomes. We're very focused on revenue generation. It's a high-risk environment at this stage because we're pre-revenue, but very quickly switching into a revenue-generating company in the coming months, and then have a very strong plan with regard growing that revenue over the coming years. Kleos has taken an interesting route with regard risk, a sort of almost a conservative old space route. So we have identified the risk associated with our mission with regard to launch, and we've put in place mitigation solutions with regard to that. So one of those was, for instance, we chose a particular supplier, GomSpace, who have a 100% reliability record. So they cost us a bit more than perhaps our satellites would have cost otherwise, but we were more likely to get a successful outcome by choosing that particular path. The other aspect is, from a launch perspective, is making sure we have insurance in place to deal with launch failures. If there's a launch problem, which does happen, whether it's a delay or whether it's an absolute launch failure, then we have insurance in place to deal with those sorts of things. So I think when investors are looking at space companies, it's looking at really the culture. You can't put all space into one pot. You have to look at the culture of the company, how that company approaches risk and how they deal and manage with that risk, because there's risk to all businesses, but it's really the risk management which is the important part of business, and we take a conservative approach with that.